Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Apple first quarter results slightly beat Wall Street's already lowered expectations, and now we know the extent of the sales plunge in China, $5 billion. We will dig into the bright and dark spots in the iPhone maker's results. And Huawei CFO Meng Wanzhou appears in court after the U.S. filed new charges against the Chinese tech giant, while China called on the U.S. to stop the unreasonable crackdown. Plus, Apple isn't the only tech company reporting earnings this week. We'll look ahead at what to expect from Tesla and Facebook. But first to our top story. Apple's first earnings report since Tim Cook let investors know that the company was cutting its forecast is out. Shares are up in after-hours trading as Apple reported revenue that was slightly higher than the expected at $84.3 billion. But the number we were all waiting for was China revenue, a steep drop-off in sales in Greater China. Apple brought in almost $5 billion less revenue in China in the holiday quarter than a year prior, $13.17 billion this year versus $17.9 billion the same quarter last year. To discuss, we've got Wedbush Securities Managing Director Dan Ives in New York, and in studio, Horace Dediu, founder of the market intelligence site Asimco and longtime Apple analyst. So, Horace, I got to zero in on China first. How bad is it?
Well, we've seen a couple of macro indicators really collapsing in the last two months of the quarter, actually, November, December. Consumption tax, VAT tax, all these were down dramatically. Let's not forget that Apple was up 16% into Q3, calendar Q3 last year. So we went from going up to down 17% or so year on year. So there was a dramatic collapse in China, and it's not just Apple feeling the brunt of it. What we're seeing potentially is a collapse in consumer confidence overall.
So, Dan, the question then is why? Is it just because of these taxes? Is it because of broader sentiment across the country? Does it have anything to do with the trade war? What is the root of this?
Yeah, I mean, look, we continue to think 80%, this is Apple, specific to a mispriced 10R phone that ultimately we believe should be 15 to 20% cheaper. I think a lot of that has been a mispriced phone in terms of also from a technology perspective. You look at the camera technology, Chinese consumers, which represent, in our opinion, based on our estimates, 20% of all of the upgrades for iPhones over the next 12 to 18 months. It's a key region. They basically looked at this phone and kind of walked away. And that's where what you see with these numbers, look, we knew China was going to be weak, but really fell off a cliff. The positives, obviously.
So hang on, Dan. Yeah. You're saying that the vast majority of this $5 billion is simply due to the mispricing of the 10R? What about all the other phones?
Well, 10R is all focused on China. You take a step back. I mean, this is really, was Cook and Apple's focus in China was 10R. And if you look at the pricing of the phone, combined, we continue to think 80% Apple specific, 20% macro, Huawei backlash, and just overall headwinds. But a lot of it is a mispriced phone given the technology. And this is a huge iPhone cycle given 20% of all overall iPhone upgrades are in China. That's the key. And that's why in this call coming up is going to be key to how this turns around, as well as on the pricing strategy, how Cook and Apple are looking at it.
We know that there are, Horace, competing smartphone makers, Huawei, Oppo, Vivo, Xiaomi, all who make cheaper smartphones, phones that are much cheaper than the iPhone. But what do you attribute this to?
First of all, just to address this last comment, the entire sector in China fell, the phone sector fell about the same rate that Apple did. We had also Samsung reporting huge losses there in market share. We do have some of the Chinese players rising in terms of market share, but the overall market is suffering. It's not just Apple.
So why are some rising but Apple not?
Well, Apple does have the premium segment, so the premium you would imagine would be suffering more. But again, the overall market fell. So I think Apple is more or less in the middle of an overall contraction in the market.
When you look at iPhone sales in other regions, we saw U.S. sales overall slightly up year over year. Sales in Europe slightly down. So, Dan, where is the growth going to come from if it's definitely not coming from China?
Yeah, I mean, look, China is the linchpin, but fundamentally, you don't need to see mega growth here. I mean, it's basically, you're looking for plus or minus 5% type of growth, give or take. And I think right now, if you look, you just want to see a stable install base where ultimately we believe 350 million iPhones are coming up for an upgrade over the next 12 to 18 months. The fear and what's weighed on the stock is the install base. If that ticks down, that's fundamental to the services story. So we believe you start to see a China rebound, but the only way you see that is if they do cut prices more with 10R. And that's going to be the focus in the call. Because otherwise, it would be a lost iPhone cycle till September. And that's the worry of the bears and the bulls. And that's kind of the debate here. Do they cut prices? And do they take the medicine from a pricing perspective?
The call is underway. Tim Cook has just started speaking. He's saying that the macroeconomic conditions were actually much worse than the company initially thought they would be. Horace, they didn't break out unit sales for the very first time, but they did give us revenue for each product category: $52 billion for the iPhone, $6.7 billion for the iPad, $7.3 billion for wearables, home, accessories, $10 billion for services, generally in line with the way that the pie normally looks. What do you think the significance is of these numbers not having those unit sales for the first time?
Well, first I want to address one thing. The installed base there was an update given that during the investor letter, and it's up 100 million over the last time that they gave an update, which means it's a 1.4 billion installed base right now in terms of devices.
900 million of those are iPhones.
That's an estimate, yes. We do have, as you cited, some of those figures in terms of their breakdown by units or breakdown by revenue by category. We have the iPad up 17%. We have the Mac up 9%. We have wearables and other growing at 33%. Just the wearables segment up 50%, which was given earlier. So, in fact, excluding the iPhone, the business is growing at 19%, which is still a smaller portion than the iPhone, but that's growing very well. So I think that overall, I think this is a healthy ecosystem. This is a healthy number of users. This is a growing number of users, and we have a great services story on top of that.
So reports of Apple's demise are greatly exaggerated. Is that what you're saying?
They have been for many, many years, 10 years, as long as I've been following the company.
Dan, would you agree?
I'd actually disagree with that comment in the fact that, right now, if you look at this, the story has changed, and the focus is on the install base side. So when you look at services and what's going to happen on the install base going forward, it's key to what's going to happen in the next 12 to 18 months. And China's a linchpin there if those customers do not upgrade. So I do think, as someone that's been long-term bull and continues to be on Apple, they are entering a different type of white knuckle period than they have before. So I don't think you could compare the two, and I think that's why investor reaction has been I think so negative. I think what you want to see here going forward is that the pricing hubris they're going to lose in China, and fundamentally the services business you'll feel more and more comfortable with. That's why what I think the biggest number here, the thing that all investors are focused on, it's the services gross margin above 60%. That's the line in the sand. That, in our opinion, one of the stocks up. That's the first time they're breaking that out. That's key to the sum of the parts valuation for the services business.
Horace.
Margins are up on services. So during the year-ago quarter, when we had a greater story, a better story for Apple, they were up. They were 58%. Now they're 64%. The story on margins is not a bad one at all, and I think we're going to see increase there as well going forward. To me, the key question on installed base is that in order for that to decline, we would have to have people switching out of Apple product. We're not seeing that. If deferrals are happening, that means they're staying still within the audience of Apple. So I think that's yes, we should keep an eye on it, but I'm not sure that loyalty is going in any other direction than up.
All right, Tim Cook continuing to speak on the call, saying that customers are holding on to the older iPhones longer than they have in the past. We're going to continue this healthy debate with Asimco's Horace Dediu, Wedbush's Dan Ives, sticking with me as we dig deeper into Apple. Meantime, Facebook could face legal suits from various U.S. states over alleged privacy violations. This, according to Washington, D.C.'s Attorney General Karl Racine, who filed his own lawsuit last month over Facebook's Cambridge Analytica scandal. Racine was the first official to take action over user data that was obtained by the political consulting firm with ties to President Trump. Racine says Facebook violated the district's consumer protection laws. Since then, some attorneys general have formed a multi-state group to investigate such claims, including New York and Massachusetts. Facebook declined to comment on Racine's remarks. Speaking of privacy, coming up, Facetime flawed. We'll look at a troubling security bug in the iPhone that can hijack your phone's camera before you even pick up. And our continued coverage of Apple earnings, of course, that's next. If you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. We're continuing our look at Apple's first quarter report. This as Apple's CEO continued to call for greater data privacy protections Monday, which was also known as Data Privacy Day. 24 hours before delivering the company's latest results, Cook tweeted, "We must keep fighting for the kind of world we want to live in. On this Data Privacy Day, let us all insist on action and reform for vital privacy protections. The dangers are real, the consequences too important," Cook said. Just one problem. Hours later, a flaw was exposed in Apple's Facetime group chat, which could allow people to hear and see you before you pick up. Apple has since disabled the group Facetime feature and said a fix would be available later this week. Still with us to discuss, Wedbush Securities Managing Director Dan Ives in New York. In studio, we've got a Simco founder, Horace Dadu. Dan, I'll let you get first crack at this one. But how embarrassing is this?
Look, I think it's a slippery slope. Because, if you look at Cook and Apple's DNA in terms on the privacy side, they continue, and you saw it at CES. I mean, obviously the advertisement they took out there was a shot across the bow. And, you put yourself on on a little bit of a pedestal, and I think that's the danger here. But look, I think it just speaks to broader concerns and just overhanging overall tech in terms of privacy, in terms of potential regulation. And Apple borderline is caught in the crosshairs. But I think that's why this is a big focus for technology investors, not just for Apple, but across the whole tech sector.
So, Horace, look, it doesn't look good. They're fixing it. These things happen. But Tim Cook has made a point of putting himself out there, the company out there, saying we are on the right side of history when it comes to privacy, taking on companies like Facebook, taking on companies like Google, when there are some things that you could point to as hypocritical.
That's true. And, even a security company, a company like a Microsoft that's really focused on make sure, corporate security is important to them. We also get caught up in all kinds of bugs and issues. So in the software business, out of millions of lines of code, you're going to have failure. What's important, I hear, is messaging and sort of dealing with it very, very quickly, getting in front of the problem. And so they shut down Facebook immediately, relatively speaking. They'll have to push out a fix. FaceTime. They'll have to push out a fix immediately as well. So the quicker you respond is what matters here.
But let's talk about the messaging from Apple and the reality. I mean, how much is Apple really on our side?
Well, I think the core business model is at stake here. What we're talking with Apple is that they're saying you buy our hardware at a premium and we're going to protect your privacy. That's fundamentally the bargain being struck, whereas they don't sell access to the individual's data in any way, which is the opposite business model, if you will. And so Apple has had this notion that we are charging a premium for product, but we're going to basically not sell anything else. That is still the case, and it hasn't changed. I think the logic here is to preserve that persona for Apple, the brand value of premium equals privacy.
Dan, is there any indication that what Tim Cook is saying is impacting some of these other companies? Is it hurting Facebook? Is it hurting Google?
No, and look, and to your guest's earlier point, I think that's a great way of summarizing it. I think, look, Apple there needs to be a line in the sand here in terms of how they view themselves, the DNA of Cupertino. And Look, I think it has hurt a bit of tech. And I could tell you, someone that spends a lot of time in the Valley, like, it's a divisive issue, right, in terms of how Apple has gone after the privacy. But I do think it's important because it is their business model. You need privacy, and especially in today's world that we're seeing more and more breaches, as well as, other sort of, things out there that consumers are worried about from their protection, their privacy. It all changed last March. One Zuckerberg, once you went in front of Congress, I think that's where Apple and Cook realized they needed to kind of draw a line of distinction. That's what he's done.
Now, Apple shares are up almost 6% now on the back of these results. So I want to dig into some of the other storylines here. But first, I want to point out that, Horace, you're wearing not one, but two Apple Watches right now.
That's correct, yeah.
So first of all, why?
Because I carry two phones, and it turns out if I don't wear one, I'll lose all the alerts. Because I'm using basically this is my remote control to my phone. So if I don't have it, I don't get calls.
So you're not worried about privacy or any unanticipated?
Well, I mean, no, I'm not.
So let's talk about what's happening in wearables, though, because we got a number, $7.3 billion for wearable, home, and accessories. What does that number tell you?
Well, first of all, wearables separate from home is going at 50%. And that's been going on for some time. I said this some time ago, about a year ago, that the Apple Watch now is a bigger business than the iPod ever was. It has overtaken the historic iPod. And so we're seeing a tremendous growth story there. With the latest version that now has a bigger screen, has onboard telephone function. It's just a great product. Now the health angle is something that's emerging as well. And there we have the EKG functionality. We're going to have probably more sensing going on there. So I think Apple is really using the watch as the focus there. On the other side, though, the negatives here are that the other category seems to be flat. That means the HomePod and the Apple TV are not really booming. They're steady, but they're not growing, and that may be something to be addressed with services going forward, because a subscription service providing unique content. There are rumors that they're getting into the studio business and they're getting into the production business, and that would mean maybe a boost in that category as well. Now,
Dan, anecdotally, I've seen a lot more people wearing the Apple Watch, but how big do you think this business can actually be?
Look, I think it's been very successful, but ultimately it's bread at the restaurant. It's an appetizer at this point in terms of what it means to the Apple Store. I think over time it could be maybe a more significant piece, but right now the focus is hardware, iPhone-led to services. And I think, the question now is, how do you get more services into the flywheel? That's going to be the key for Apple. You have more wearables out there, but it comes down to content. I mean, we continue to strongly believe that's what's missing in the product portfolio. Significant content. They need to drive into the services. And I think, look, when you go through a dark chapter like they've gone through over the last few months, and we'll continue to go through what they're seeing in China, now it's a point, you got the install base, put a fence around it, drive it on the services side. With wearables, definitely a silver lining out there, as you've highlighted, and I think you saw that again this quarter.
Tim Cook on the call just now saying we're confident as ever in the fundamental strength of our business, and we have a very strong pipeline of products and services with some exciting announcements coming later this year. Horace, what could those be?
The problem is Tim says this all the time, so I really don't know. I think that I think content deals is something that people are looking forward to. I think more healthcare things are really exciting. They're doing trials. They're really, I said this also once, that I think more people will have diagnosed diseases through Apple products than some of the EKGs in doctors' offices, for example. So we're really seeing something there. It may not be a business for a long time to come, but these are really exciting things that drive loyalty, that drive, customer satisfaction. And we're seeing those numbers just in the 90s all the time with Apple. And this builds fundamentally on that question of, like, do you have an installed base that's going to be reliable going forward? 1.5 billion people are going to be using Apple products within, a couple of quarters from now. 1.5 billion is more than the Windows install base. It's on that magnitude. So it's a great great audience to have for Apple to introduce new product and new services. Really interesting experimental stage, I think, here.
All right, well, we'll have to leave it there. We're going to continue to cover earnings. And Horace, now we know if you don't pick up on one line, we will call you on the other. Horace Tedu of Asimco, Dan Ives, Wedbush, continuing this conversation about Apple throughout the hour. You can turn to your Bloomberg terminal for more on Apple's results. Just check out TLive Go to get commentary and analysis from our expert editors. We're live streaming on Twitter. Meantime, check us out at Technology and follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg. Staying on earnings, SAP reported cloud bookings for the fourth quarter slowed, and the company announced a restructuring program to better compete with Salesforce and Oracle. It expects more than 3,000 staff to take voluntary leave packages. SAP CEO Bill McDermott says the company will be resilient in the face of trade tensions, but also gave a cautious outlook.
There's no question that there is a tension in the global trade community over the tariff matter with China and the U.S. We're hopeful that that will resolve itself. But the one thing I always remind people, we live in uncertain times.
Google said it is introducing a new process to verify that advertisers for the EU parliamentary election. It will also release a report in a few months and a searchable ad library to make information accessible. The European Commission acknowledged that big tech companies have made progress, but more is needed to ensure adequate transparency. And Roger Lynch, CEO of Pandora, will be stepping down from his role and exiting the company after shareholders approved the deal for SiriusXM to acquire the music streaming site. Other Pandora executives, including the general counsel and CFO, will also exit the company. SiriusXM CEO Jim Meyer will oversee the newly combined company. And coming up, U.S. ramping it up its fight with Huawei just as China and the U.S. trade talks resume in Washington. How will this impact these continued conversations? We'll discuss next. And we continue to monitor the Apple earnings call. CEO Tim Cook striking a bullish tone, saying that exciting product announcements are in the pipeline for later this year and that the company will continue to invest. Apple shares rising to the highest level in a month in after-hours trading. This is Bloomberg. This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Emily Chang in San Francisco with Sherry An in New York and Heidi Stroud-Watts in Sydney. Let's take a look at the global tech stories of the day. Heidi?
Emily, shares of Tesla need a 21% rally by March 1st. If not, Elon Musk faces a $920 million bill. That's the amount of debt from convertible bonds issued back in 2014. The electric car maker can avoid the payout by exchanging the note for a mix of cash and stock, but only if the shares rise 21% from the current level. It's one of the biggest privacy-related problems Apple's ever dealt with. iPhone customers discovered a software bug that lets people listen in on others by way of the company's Facetime video chat service. Apple now appears to have disabled the flaw remotely. Earlier, it had said that it would release a software update this week. And staying with Apple, the company projected quarterly revenue that came close to Wall Street estimates. That suggests a punishing end to 2018 hasn't gotten any worse. Apple said fiscal second quarter revenue will be between $55 billion and $59 billion. Analysts were looking for $58.9 billion. Apple also reported better than expected earnings from the key holiday quarter. And those are the top global tech stories today. Emily.
Heidi, thanks so much. Sticking with Apple's first quarter results, I want to bring in Junhong Lee, JL Warren Capital Head of Research, who joins us now from San Diego. Now, June, before we dig in, I want you to take a listen to what Tim Cook had to say on Apple's earnings call just moments ago. Take a listen.
Our customers are holding on to their older iPhones a bit longer than in the past. When you pair this with the macroeconomic factors, particularly in emerging markets, it resulted in iPhone revenue that was down 15% from last year. Our iPhone results accounted for significantly more than our entire year-over-year revenue decline.
Now, the macroeconomic conditions, June, are one thing, and Cook said that they were much worse than even Apple anticipated. But there you see him saying that people are holding on to their iPhones longer. We all know this, but he's for the first time kind of admitting it. What do you make of that?
I mean, I think the data speak for itself, right? According to the performance of iPhone sales, I mean, there's no doubt, there's very little doubt that iPhone this cycle is a failure. I mean, the marketing of XR and the pricing points and the slew of SKUs kind of don't make sense. And especially in emerging markets, when the trend of commoditization is more evident perhaps than the US and North American markets, I mean, they're facing intensifying competition and of course coupled with the weakening domestic economy in China, as well as perhaps in Europe, we are seeing the big drop of 15% year over year drop in iPhone revenue.
To your point on pricing, iPhone prices, though, seem to be falling in the current iPhone cycle in China. This chart just showing you those numbers, and we can actually see some deep cuts in some models of as much as, 15% or so. So if we're expecting that the prices to fall from last year to, say, now in January, could we see some help coming from lower prices in other online stores, not necessarily in Apple stores?
That's right. Apple stores never really offer the direct discounts. It's the resellers that sell on JD.com, on Tmall, they're on Pinduoduo nowadays, as well as other social e-commerce platforms now offer heavy subsidies to move the unit sales. The good news is we are seeing the volume sales picked up quite a bit when the discounts deepen. The bad news is I believe it's going to impact the margin for the OEM eventually, because the resellers not going to taking all the loss, right? As you see in the chart, for some SKUs like XR 125G capacity, the discount was almost 20%. So according to our checks, Apple has been subsidizing high single digit to the resellers and the distributors on those e-commerce platforms.
Interesting that Apple would help there. Now, how much, June, do you think what we're seeing is the result of a China-U.S. trade war and will be short-term, therefore, if a deal is struck?
I don't think that this has anything to do with trade war at all. I think it's a product cycle, and iPhone's weakness is not just in China. I mean, it's pretty evident in the US and in Europe as well. And going back to Tim Cook's point, their phones are just great phones. I mean, it can be used beyond 2 years and sometimes 3 years time frame. So the replacement need diminishes. Now, even at the height of China and the Canada tension, geopolitics-wise, we are seeing great sales for Canada Goose and other Canadian retailers. So I don't think nationalism or government, PR guidance played a role here. I think it's a product cycle. iPhone just needs to ramp up innovation, and for the same price, the consumers in China have the choice of getting an iPhone 6 versus first generation, the current 2018 Huawei or Xiaomi phone. So the value proposition isn't in favor to Apple.
It seems the trade war, though, is having an impact on Apple suppliers, whether it's Honhai or Pegatron. They're talking about moving to India, Southeast Asia. How can we expect these numbers out of Apple to affect Asian suppliers?
I think that's a more direct impact of a trade war on Apple. I mean, the impact is on the supplier and also their manufacturing-based reallocation going forward. But that doesn't have much impact on this current generation of phones. It will have impact for their supply, the strategic supply chain reallocation globally going forward. Say, for example, this year, we suspect Apple will gradually move about 5 to 10 million of iPhone units of production from China to India. And those phones made in India, not for for the Indian market. Those are higher end, this year's phone for the U.S. markets. Just in case, I think the management is preparing for the trade war, the trade tension to be there, to be the background noise for a relatively long period of time.
Junhong, thank you so much for joining us. Junhong Lee at JL Warren Capital, there joining us from San Diego. Much more ahead, so stay with us. This is Bloomberg.
As we've been reporting, the U.S. has hit China's largest tech company with a string of charges ranging from IP theft to fraud. The indictments against Huawei come just ahead of crucial new trade talks in Washington. Our China correspondent Tom McKenzie has this report from Beijing.
The U.S. Department of Justice lifting the lid on a more than year-long investigation into China's largest technology company, Huawei. There are allegations here of bank and wire fraud. There are allegations that the company conspired to deceive U.S. banks into getting around Iran sanctions. There are allegations and accusations that Huawei stole technology from T-Mobile, and there is the allegation that Huawei offered bonuses to employees to pinch technology from other rivals. The US also officially asked for the extradition of Huawei's CFO, Meng Wanzhou, from Canada. Huawei put out a statement denying all of these allegations and saying that it has no knowledge of any wrongdoing by Huawei CFO Meng Wanzhou. Now, Wilbur Ross, the Commerce Secretary, says that these criminal charges against this company will not come up during the talks with his Chinese counterparts, that they are separate to the trade negotiations. But if they don't come up, they will certainly be the elephant in the room, because one of the key charges leveled against Huawei is, of course, intellectual property theft. And intellectual property theft was right at the heart of this trade dispute. That is what triggered the imposition of tariffs against Chinese goods in the first place. Tom McKenzie, Bloomberg News, Beijing.
Now, Huawei has reacted to the charges by saying, quote, the company denies that it or its subsidiary or affiliate have committed any of the asserted violations of U.S. law set forth in each of the indictments, is not aware of any wrongdoing by Ms. Meng, and believes the U.S. courts will ultimately reach the same conclusion. Now, Huawei and its U.S. affiliate were ordered to appear in federal court in Seattle on February 28th to face charges. The company engaged in a scheme to steal trade secrets from T-Mobile. For more, I want to bring in our Bloomberg Tech Global Executive Editor, Tom Giles. So, what is the very latest here in terms of the impact on the trade talks in Washington?
Yeah, well, I mean, the timing is everything, right? And these are getting these charges have come down just as the trade negotiations heat up. There's two schools of thought. One of them is this gives U.S. leverage, right? It shows we're serious, and it gives us some kind of a negotiating chip against China. There's another school of thought, and we spoke on Bloomberg TV yesterday to a former U.S. trade official who said this undermines the U.S. case. This has the potential to show China that we're not serious about either side, either the trade issue or the case against Huawei, because why would we use one as a bargaining chip against the other? So in some ways, it kind of undermines our case to show that, well, we're willing to make concessions on this side of things in order to get what we want here. Well, then how serious were you about this side of things in the first place if you're really just going to use it as a negotiating chip? Again, it's a different school of thought. So it could go either way as far as, U.S.-China is concerned.
Now, the U.S. has formally requested for
extradition. That's right.
Extradition for Meng Wanzhou from Canada to the United States. What's the process there?
Yes, so now Canada has 30 days to assess whether to honor this request. It's a very interesting thing. It's a very interesting, political situation that Canada's left in, right? Canada's paying a high price to be the U.S. ally here. They've had Canadian nationals arrested in China, seemingly as a result of, kind of retribution for Canada's role here. So it's not working to Canada's advantage. And you've also got to take into consideration this question of countries around the world, including Canada, and the U.S., by the way, want to build out 5G networks. And the fact of the matter is, a lot of telecom companies say Huawei is selling good equipment at a low price. Why can't we buy it? And there's all this political pressure from the U.S. against using Huawei's equipment as a result of these tensions.
Tom, your team has so many stories out on every single angle of this Huawei stories. The title of one of them is U.S. Message to the World: Don't Trust China. on 5G. How will others receive this message?
I mean, they've got a way, as I said, your desire to use Huawei's lower priced and arguably reliable equipment when it comes to 5G, and this assertion by the US government that China can create a backdoor, Huawei can create a backdoor to China, that this represents a potential security threat for your country, your sensitive trade secrets, possibly your national security. That's a trade-off that a country has to make. Do I want this equipment, or do I want the potential for a backdoor? Where we see the U.S. needing to be more forthcoming, possibly, is to show more of why Huawei is a threat. It's one thing, yes, they're stealing IP, allegedly. Yes, they're violating U.S. trade sanctions. But are they a real threat to national security in terms of creating a backdoor for China? Are they saying to China's government, come on in, listen to these conversations between, the U.S. and its allies? And that's an open question.
Still don't have any evidence of that. I want to tie this back to Apple earnings because Huawei, of course, is one of the big competitors to Apple in China. They're not seeing their market share fall like Apple is in China specifically. And they're in an interesting and perhaps advantageous position because Apple has to outsource its chips, Intel, Qualcomm, whereas Huawei makes its own. So that's another part of Huawei's business. How is Huawei's business going to fare amidst this onslaught to the 5G side?
Yeah, I mean, it is an important part of their business. We spent time with Huawei in its labs and in its factories in China, and the message that they're trying to send is that we're more than just about telecom equipment, telecom networking gear. We're moving into new areas. We're moving into places like, the Internet of Things, AI. So they are definitely trying to send the signal to the world that we have other businesses that we can rely on. We also did this story about the fact that their chips are in a lot of security cameras around the world. They're everywhere. So there are other businesses. And they have, as you said, a mobile phone business that is doing very well in China despite the slowdown. The slowdown is real, and it's hurting many companies, not just Apple. Where Huawei has an advantage, though, is it prices its products at a lower price point, something Apple failed to do, and that really hurt Apple in the most recent quarter. And we'll see what Apple starts to do with its pricing to kind of get around that. Another advantage for Huawei in China is local companies, we've heard, are telling their employees, buy Huawei, buy local, don't buy the iPhone. Let's see if that really is starting to take a toll and if the toll continues into 2019.
Well, again, Apple sales in China did sort of fall off a cliff, dropped almost $5 billion year over year in the holiday quarter this year compared to last year. We've been listening to Tim Cook speaking on the earnings call. Take a listen to what he had to say about Apple's strategy going forward.
Apple innovates like no other company on earth, and we are not taking our foot off the gas. We'll continue to invest through near-term headwinds, just as we always have, and we'll emerge stronger as a result.
So where are we going to see that innovation? People want to see a big, snazzy, new product category, which we haven't seen now in a long time. Does innovation now look like something different at Apple?
Well, what Apple has said, what they're emphasizing is things like their installed base. 1.4 billion people have this device, and Apple has an entree into your life as a result of that, and it can push services, another area that they're emphasizing. But growth in both of those, by the way, also slowing.
Do we call that innovation?
Innovation happens in a lot of ways, Emily. And Luca Maestri, the CFO, did talk on the call about new services that are coming down the pike. The question is, do you have the same margin and do you have the same sales volume straight up as you do on hardware? Services they're harder. And they account for a smaller percentage of overall sales. So I wouldn't rule out the possibility of innovation in these areas. My question is, how quickly can they make up for the shortfalls that you're seeing in the iPhone sales that have accounted for so much of overall revenue for so long for Apple?
Tim Cook has also said health will be one of Apple's greatest contributions to mankind. We'll continue to watch how their health efforts unfold. Tom Giles, as always, thanks for stopping by. Still ahead, big tech earnings continue throughout the week. What to expect from Facebook and Tesla as they report. Coming up, this is Bloomberg. A big week for tech earnings continues tomorrow. Facebook and Tesla are up next with their fourth quarter results alongside Alibaba, Qualcomm, Microsoft. Will the tone be similar to Apple's? Joining us from New York to discuss, Bloomberg's Garrett DeVink, who's across all of these. So, Garrett, will there be some similarities?
Yeah, I mean, it looks like a pretty mixed bag. We've got, pretty optimistic views on the big advertising giants. That's Google, which is not till next week. But, of course, Facebook tomorrow. It was a big fourth quarter for e-commerce. If you cast your mind back to Black Friday and the Thanksgiving weekend, there was some great numbers that came out of that. That will also bode well for Amazon most likely. And specifically on Facebook, it's going to be an interesting quarter because, of course, they had a really tough year. The stock down more than 20%. The company's already come back up a lot this quarter as people start to prepare to kind of put that behind them. And if you just think about how the stock market sort of emotionally reacts to some of these things, sometimes there's a bit of an overreaction. And, if you had to ask me what I think will happen, I think Facebook will probably have a pretty good print, and you'll see a pretty good response there as people say, oh, all that bad stuff looks like it's behind us.
Well, and Facebook analysts are expecting something like $1 billion more profit in this quarter than in any quarter ever that Facebook has reported. But I suppose the bigger question is, over the longer term, do you think users can, emotionally get over some of the distrust of the company, and will we see an impact on engagement?
Yeah, I mean, you have this sort of the user concern, and then you have the advertiser concern. Of course, the advertisers are the ones who decide whether or not Facebook gets revenue and grows revenue, but they're obviously concerned about user numbers. And so, the big concern last year was that in its core markets, the United States, Canada, Europe, that the core Facebook app, that old blue app, was just, not growing anymore. People were leaving it. People were not using it that much anymore. And moving on to other apps by the companies, but also, of course, by Instagram. And when you do talk to advertisers, which I've been doing a lot the last couple of weeks, they said that this was a big quarter for Instagram. It was a quarter where, we know that Instagram has been growing very quickly, but advertisers have really understood it at this point. Now that the product is many years old, people really are getting it and pouring money into it. So, Instagram not big enough yet to sort of assuage those concerns about user growth, but I think it will show some good revenue growth, and the market will like that.
Now, Facebook not exposed to a China slowdown because they don't operate there, neither does Google, and neither really does Amazon. What are you looking for in the Amazon side of the story?
Yeah, I mean, again, I'll talk about, fourth quarter is, of course, the most important quarter for Amazon because of all the e-commerce that happens in those Western societies, and it was a big quarter. I mean, e-commerce is growing not just because the U.S. economy is growing, but because people are jumping into e-commerce in ways that they have been doing over the years. It's just accelerating. I mean, if you could think about all the retail bankruptcies that we've been reading about in the news, that's all at the end of the day good news for a stock like Amazon.
Tesla always also coming up, and as usual with Tesla, there are the fervent bulls and the fervent bears.
Tesla had a pretty good third quarter. If you remember that was sort of a moment where all this concern about Elon Musk, what he was doing on Twitter, with his fighting with the SEC, his personal life bubbling into the public affairs of the company, and then they posted a pretty good quarter in Q3, and that seemed to quiet the critics for a while. Now the company has sort of been telegraphing that this quarter won't be quite as good as Q3, and you've seen the stock already come down. I think it's around 10 or 12%. 5% just this month. And so, that might be baked in already, but, we're always looking for commentary then on what the future is going to look like, of course. And for Tesla, they need to keep raising money. They need to satisfy their bondholders. Whether that's going to be more of a debt sale or selling more stock, we'll have to see. But it's a good position to be in, that the company actually, needs money to keep funding its business, and that it's not, shrinking and shrinking and fewer people are buying Teslas.
All right, Bloomberg's Garrett DeVink across it all for us. Thanks so much, Garrett, for weighing in there. To recap the top story of the hour, of course, it's Apple earnings. iPhone sales fell 15% in the period, but other businesses grew over the holiday quarter. Revenue from wearables, home, and accessories jumped 33%. On the earnings call, Apple CFO Luca Maestri gave the order of popularity for the latest iPhone, said the iPhone XR, XS Max, and XS popularity in that order. That does it for this edition of Bloomberg Technology. Tune in Wednesday. We'll be covering earnings season all over again with Alibaba, Facebook, and Tesla on tap. We're live streaming on Twitter. Check us out at Technology and follow our global breaking news network, TikTok. This is Bloomberg.